Welcome to Alpha Bytes. I'm your host, Marconi White, and we've got an agenda hotter, I dare say, than Michael Saylor's $1 million Bitcoin price prediction. Yes, you heard that correctly. On this week's show, Ray makes the case that a Bitcoin mining stock is poised to leap forward and lead the pack. Ben Lilly decodes the CPI narrative and why it might all be part of Papa Powell's plan. Ooh, that's too many P's. We discuss worrying signs of market liquidity drying up from the global financial punch bowl. And stick around to the end. You're not going to want to miss this because JJ is going to share behind-the-scenes knowledge about the man now teaching Elon how to put Zuckerberg in a chokehold. And then we're going to be taking bets on who's going to win. How exciting is that? I've got JJ, I've got Ray, I've got Ben Lilly in the studio. Gentlemen, welcome. I'm super pumped. Let's get started. Okay, we're going to get going on a review of the market. As always, JJ, I want to turn it over to you. What are you seeing right now? Where are we headed?
Hey guys. So as we see, we've been consolidating in this 30 to 31,000 range for about 3 weeks now. So price just continues to consolidate, and seems like every time we see open interest kind of get ahead of itself, we have another wash down. And what we really see now is just market makers sucking all the liquidity out of this range as possible. I believe that can only go on for so much longer before we inevitably see a break in one direction or the other. Obviously, we have some macro data coming out this week with CPI tomorrow morning, followed by PPI on Thursday morning. The dollar has been breaking down pretty strongly over the past few days. It's currently at 101.79, which is a multi-month low. Now it's kind of at risk of infringing upon the year-to-date low, which is at 100.90, I believe. So either the CPI or PPI could be catalyst that send the dollar to new year-to-date lows. I believe that would also be a catalyst that sends Bitcoin up above the $32,000 range to new year-to-date highs. And then obviously that CME gap left over from LUNA I mentioned in my article this week at 35,100 would probably quickly come into play there.
JJ, let me break in there. For those who didn't have a chance to read the excellent article, can you just explain that briefly, the CME gap that you're looking at?
So CME gap, price trades at one level at Friday when the CME closes, and then it opens at a different on Sunday night. That creates what's known as a gap. Usually the gaps are closed by Friday or so. Occasionally you'll have longer gaps that last weeks, months, and people tend to forget about them. So one that's been left over, obviously, for a long time now is the one left over from LUNA. Since the LUNA unraveling happened on a weekend, there was tons of Bitcoin selling over the course of that weekend. Price never got back up to the $35,000 range. And this seems like an opportunity for price to finally close that market discrepancy. And obviously, the closer we get to that 35,000 range, the more of a target it becomes. And I think if Bitcoin does break above new year-to-date highs, especially paired with the dollar falling below 100, it's almost I would put it near 90 to 100% certainty that we'll see that gap close. So that's kind of like upside target number one, should that scenario play out of Bitcoin above 32,000, dollar below 100. And obviously we have those catalysts that could play into that. At the same time, price action's been so choppy that I wouldn't be surprised by like a whipsaw price action. Maybe CPI comes in hotter than expected tomorrow, causes a dollar rebound and Bitcoin to fall back to say the 29,000 or lower range. Or vice versa, CPI comes in lower than expected, we get that blow-off pump, and then maybe PPI comes in hot, and we see the dollar rebound then, and Bitcoin go back and just continue to wipe out some more leverage. We'll just see. I think the upside remains the stronger bet from here. There's obviously a ton of momentum. We see this being reflected in crypto stocks, which are just absolutely pumping for the past month or so now. They've just been shattering new year-to-date highs, so that seems to be a good leading indicator, in my view.
Just want to jump in real quick. You mentioned, JJ, that the upside does look a little bit stronger at the moment. And just pulling up, what is the cumulative volume delta on spot markets right now at the aggregate level? And it's kind of reversing its trend over the last week, which was a kind of severe decline, which was indicative that demand was drying up as we just crawl sideways for, how long has it been now? This has been since
3 weeks.
Yeah,
June 21st.
Insanely too long, it feels. And that downward trend has sort of started to flatline a little bit. Looks like it kind of broke its trend on the 9th, and we got a little bit, some action yesterday. Was it yesterday or was it this? It looks like late yesterday UTC. And it reminds me that the New York trend has been relatively strong of late, and that's a trend that it takes a little bit of time to wean off. So if that progresses, I wouldn't be surprised to see a nice push to what you had mentioned here, and it would kind of align with some of those other technicals that I've been keeping my eye on.
Yeah, you don't want to fade the New York. When that's going strong and the bid's on, it's typically a good leading indicator that we'll be going higher. and vice versa when they're selling off consistently. You don't want to be on the opposite side of those stalwarts for sure.
No,
What's your take on like after if we do kind of fill that gap that you've been alluding to? Do you think we're going to start driving a little bit lower, have a little bit of a soft summer and relatively dog day a summer like?
I guess that so I'm kind of thinking one of two scenarios. Like there's a scenario where the bottom just falls out of DXY and we see it kind of fall towards the low 90s. If that were to happen, say Q3 into Q4, I think there's a chance we could get into the maybe mid 40Ks, but realistically, like if you rode this rally, it gets up to 36K, DXY wicks below 100. I think that's a pretty good spot to look to de-risk for at least the short term and probably wait for like a retest of, if we do get that breakout, right, wait for that, say 32K, 29 to 32K retest. That would probably be a good spot to refill some in anticipation of possibly a blow off top there. I don't think we just go straight up, say 36K to above 40K, but anything's possible if DXY starts to slide. But I would be extremely cautious after that gap fill for sure.
Now, what about it? All the discussion right here is really about Bitcoin. I looked this morning and Bitcoin's dominance is at 51.65, at least at the time I looked at it. Is this a Bitcoin mostly rally and the alts are just kind of waiting? Are we going to see some push higher for those?
I think that probably comes if we do get that leg higher. Maybe we consolidate some, or alts don't look ready yet to me. We'll wait and see. Maybe it just blows off above 2,000 from here and proves me wrong. But I think there's still some time for alts to catch up, and it's not going to be immediately. I think the narrative with the ETF filings and all that, it's all very Bitcoin positive for now, and alts will have to wait a bit.
All right.
I'll add in that I don't really think we've seen that puke on ETH BTC yet. That kind of resembles the start, or almost, I don't know if you want to call it the end, but maybe the end of the first leg, which would be where Bitcoin dominance continues to rise closer to and kind of fill in that gap right now between 51 and 56-ish%. And in doing so on that last leg up, I would expect to see the price chart at ETH BTC just puke lower, start to consolidate for maybe a week or two. And then we start to see a little renewed action on that chart, which would not necessarily indicate that Bitcoin would be rising in price, but ETH is just being stronger relative to Bitcoin. And that would be that first part of not altcoin rally, but just something other than Bitcoin dominating the market.
I think that will come to DXY sub 100. That's just kind of what I've always had in mind is Bitcoin will get that leg up, consolidate. Maybe DXY consolidates below 100, and then we see the alts really take off as DXY kind of moves to new lows from there.
Okay.
Full mapping of it, if that makes sense.
Got a couple of data points to be watching. I suggest if you're listening to this, you follow up with us next week, because I'm sure we'll be returning to some of this data just to see how it's evolving, especially after we see the final CPI print, which lets me move on to the next topic. Ben, I think you're going to be walking us through what you're looking at for the CPI chart. You want to tell us what's on your radar?
Yeah, I'll go ahead and dive into it. And I'll be honest, I was pulling up CPI yesterday, not because it was actually due this week, but for other interests that had to do with, this is actually a theory from TD that, at some point we're going to have another leg higher in inflation. And understanding where that might surface from has been a lot of rabbit holes of mine of late. And if you listen to last week's podcast, that was really what sparked that dive down to those other rabbit holes. But when we actually pull up the CPI chart, there's some interesting things to note here, especially in relation to how Jerome Powell is going to be looking at raising rates moving forward. I mean, right now, before we get into the CPI chart, if we pull up the CME probability chart for what rates will be doing at the next meeting, what's the next meeting? July 26th. Right now, there's 92% probability that we will get a 25 basis point hike. This is up from the probability from 1 month ago, which was 52% that we would see a rise of 25 basis points. So that's a pretty stark contrast from what we were expecting a month ago, and this has just been a steady trend higher. So it's almost starting to be baked in that we will be getting a hike. So now going back to CPI, why am I bringing this up is if we go ahead and pull it up, we can see from, let's see, it looks like May 2020 all the way to June 2022, kind of the rate of change of CPI. So how how fast CPI was rising. And for those that don't really understand what CPI is, it's a way to be able to price the currency, the US dollar, relative to itself over various points of time. And the way they do this is they figure out, what is the average sort of items that people are buying within, in this case, the US, and what were those costs of those goods at various points in time. And everybody tends to point like, oh, you're changing the basket of goods. And that's yes, because preferences have changed. And so, yes, 40 years ago, you were drinking maybe unpasteurized whole milk and very unpasteurized, rich, creamy butter. And now you might have soybean laden soybean oil or soy.
All right, Ben, I'm gonna cut it here because now I'm starting to think about food and I don't have good thinking when my stomach's hungry. So bring us back here. So you're looking at the CPI and the rate of change, and the chart is starting to say where is it starting to see that the rate of change is increasing or decreasing?
Yeah. So ignoring all the food talk for a minute, thanks for getting me back on track there, Marconi, in the politest way.
We know you're not cream to the coffee because you're the coffee connoisseur. We get it. We get it.
So yeah, the rate of change was really high initially for those 2 years. And then in June 2022, we can see that rate of change has plateaued a little bit. It's still increasing. It's just its slope has changed. And the biggest change took place between May 2022 and June 2022. And so this new reading is going to basically take that off the year-over-year reading for CPI. And so that's why the expectation right now for CPI, I think the forecast is around 3%. And if we pull up what it was last month, it was over 4%. And so the headline news is going to be like, wow, we've really combated inflation. Things have looked good. So with that knowledge, I'm really interested to see how Powell is going to start to navigate, that headline effect, that inflation almost feels like it's beaten because we're now coming down from over 4% to almost sub 3%, depending on what it comes in at. So how is he going to go ahead and navigate the next few weeks when he wants to go ahead possibly and raise rates to combat inflation? He's going to have to find a new narrative. And so this moment in time, it feels like he's going to start to set the tone of something. Specifically what that is, I'm not sure, but it's something to take note of in the weeks to come.
I want to ask the rest of the guys here. We can look at the data. You mentioned when we were talking about the milk that there's frustration perhaps by the onlookers who say, well, we feel like this methodology changes all the time. So as we start to see these numbers come down, we don't feel it when we go to the grocery store. We don't feel it when we go to the gas station. So for Ray, I'm going to ask you specifically, do you trust this, that the numbers are coming down? Do you buy it?
That's a tough one. I mean, my groceries are a little bit cheaper. I've not tracked the bill to see if they're actually going up. What caught my eye this week is that 30-year fixed mortgage is 7.33%. It's like a 40-year high. So I'm not too sure, to be honest. I don't know how much weight I put in the CPI data.
Right. That's a maybe. Okay. JJ, are you buying that the inflation's coming down?
I think so. I think it definitely has gone down somewhat, but I think it's ultimately going to be like the waves where it comes and it goes. And I think it's just something that we have to deal with persistently. One of my favorite things to do is get those old books. Have you ever seen what life was like? And you could pick the random year, say 1980, 71, whatever. Here's how much a loaf of bread cost, milk, the average house. And you could just look at those things and you see it's literally up only forever. The dollar just constantly loses value. So we'll have waves where it's like, oh, wow, I saved $3 on my grocery bill this week. But 3 years from now, your grocery bill will be 3 times as much. And it's just, there's no way around it,
So I want to chime in real quick because that little how much things have increased. And I had that same sentiment. But when we actually go ahead and pull up the CPI line chart, I was trying to figure out when was, how long did it take to double? And it was 1995 to right now. And that doesn't feel like a long time when you think about prices doubling. But then when was the time it doubled before that? And pulling it up, it was like 1980 to 1995 saw a double. So that was 15 years, substantially less than the time that we're experiencing right now. And then the time before that, it was 1979 to 1970. It was only 9 years. So with that context, what does that make you think about how fast prices are increasing or not?
I don't put a whole lot of stock into CPI to be I do it because the market says it's important. So in terms of trading and stuff like that, but in terms of my everyday life, it just seems like it's an arbitrary thing, basket of goods that don't necessarily reflect the way that reality changes, right? I I can just keep my receipts from the food store for the past 5 years and probably go back and look at them, and it's perpetually going up. And CPI might change in all these different ways, might go up and down, but there's just like that the element of empirical truth, right, where things just go up, and maybe that's not reflected in the official government numbers, but you can see it in your own life.
Can I jump right back in real quick, Marconi, because I wanted to hit on something that JJ just hit on, which it's like he does think it's worse essentially than what CPI reflects. And the reason I was bringing up the basket of goods of what's in there is because if you wanted to buy that same basket of goods of what those items were 50 years ago, CPI is going to look a whole lot different. Like it's not going to be 2 decades or 3 decades before price doubles. It's going to be much faster.
Right.
There's a great joke too. If you guys are familiar with Rudy Havenstein on Twitter, it says, "How much is this thing I need?" Cashier, it's $20. You, but last year it was $15. Cashier, yes, but now it's cheaper because it's better. You, but it's not cheaper. It's 33% more. It's $20. Cashier, no, it's 50% better and $20. You, what? Cashier, do you have an econ degree? Do you have an econ PhD, sir?
We're going to start asking people for their credentials before they can purchase items or make complaints about pricing. I do find the challenge that Papa Powell has, right? That it's a little bit if you're damned if you do, damned if you don't when you talk about inflation, because there is a psychological anchor that is placed on goods that is not connected to perhaps to the joke, JJ, you just shared, which is that, well, things have gotten better. Yeah, but I'm looking at the price. My income hasn't kept up with that. It's not as if I got a 33% raise. So how do I think about the delta there? So there's a challenging narrative for Papa Powell and the rest of the Fed. And in fact, I think globally, you've seen headlines coming out of different countries. I think it was just a couple of months ago, we saw a commentator in England say, well, the UK public is just going to have to get used to a lower standard of living. And of course, that went over about as badly as you would expect. So Ben, last thoughts on the CPI report. What's next?
I'm going to be honest, I don't know what's next. And I see that this discussion that we're going to have to be used to a 4% inflation reading, again, arbitrarily set moving forward. But if we're going to start falling below that, like what is your reason to go ahead to keep raising rates? And this moment where we start to kind of pivot to plateauing of rates over time, we're starting to see that show up in a lot of investors and expectations, and even people that decide to figure out what rates are going to be in 6 months. They're essentially saying the same thing. So what is Powell's next focus going to be? And I'm really interested to find out in his next talk what that might be.
Well, I may argue that he still has some ammunition from a narrative point of view that have they really ever moved off of the 2% target for inflation?
That's a whole nother dialogue, because that 2%, as they reflect back on when they set that, that was in a world where there was a lot of globalization. So they actually should not have even had 2%. It should have just been 0 because they were able to offshore a lot of it. And now they're like, oh, shoot, we really could have up there.
I asked the wrong question. I know you're going down these rabbit holes right now, and I'm you're right. That would be an entirely different discussion. Okay, so we're gonna see what the Fed comes out with over the next couple of weeks as we see this next reading. So more to come. Suggest you check in next week and the week after as we continue to follow this. So Ray, I'm going to go to you, and I think we're going to go from the widest topic of inflation down to something very narrow, which is going to be a potential market opportunity looking at some Bitcoin mining, I believe. Ray, open up. What are you looking at? What's on your radar?
Bitcoin mining stocks have been on my radar for a few months, and the reason for that is because institutions have been turning bullish on Bitcoin. You've seen the narrative on Bitcoin in the mainstream headlines and in crypto media headlines, and on CNBC and Fox Business News begin to change. They're all into Bitcoin again. It's not a Ponzi. And in this pre-BTC ETF era, I believe the institutions are seeking exposure to Bitcoin through Bitcoin mining stocks. And proof of this comes as recently as July 10th, where a SEC Schedule 13G filing showed that Vanguard Group had opened up some pretty hefty positions in Marathon Digital Holdings and Riot Platforms. In fact, the Vanguard Group now has more than 10% stake in each company. And if you take a look at a lot of these Bitcoin mining stocks, at least 6 of them, different companies, they're up like 300% for the year. And there still remains a lot of potential for further upside, I believe, in the double to triple digit percentage gain range. So I like this movement because it shows that, the additional interest in Bitcoin mining stock from institutions basically means they want exposure. And a few weeks back, JJ and I talked privately about the short interest on Marathon shares. It was through the roof. In fact, as we speak, Marathon Digital Holdings is still on Yahoo Finance's list of most shorted stocks. But I'll let JJ probably touch on that in greater detail in a few minutes. Does someone want to get something in?
No, I think
No, just chiming in saying that it still is high. Like,
Yeah.
this is the definition. It's such a beautiful setup on these Bitcoin stocks. All of them. Like, you can look at Coin, MicroStrategy, Marathon. They're all way over shorted. And for whatever reason, like, whoever the people who shorting these stocks is didn't close at the lows. Like, Bitcoin was breaking up even after the BlackRock fight. Like, I thought for sure we would see the short interest drop. But now, like, imagine you're on that trade and you're short and you're not amply hedged. And now you have like Vanguard's not going to dump those shares. They're the type of institution that buys and holds for a very long period of time for their clients, right? It's retirement accounts. That's not somebody day trading. So now all of a sudden you have this huge swath of that float keeps getting smaller because those shares are effectively off the market. So now it becomes much easier to really squeeze out those shorts and drive price higher. If somebody, say Bitcoin does make that move, like we get a lower CPI tomorrow and Bitcoin breaks up to above 35,000. These, like, we saw what happened with GameStop, right? Like, the ability to cause these short squeezes when the short float interest is so high, it could be really a really exciting month here for coin stocks. And they do seem like, I'm not saying go out and buy these because they do seem very overextended, but the trap is certainly there if somebody wants to squeeze these people into oblivion because they refuse to close at the lows. So it's pretty funny.
Yeah, I would say
what you're looking at
those
specifically.
Hey, those people that are heavily shorting Marathon and Riot, they should probably just cut their losses and walk away with burnt fingers instead of losing their entire arm. Or they should hope that Binance blows up and that CZ gets a red notice and arrested within the next week or two, and that as a result of Binance being kind of like a market leader in volumes, that leads to some sort of double-digit pullback in Bitcoin price temporarily, allowing you to exit those positions. Yeah, that's your only hope. That'll allow you to exit your unprofitable short at a lesser loss, because the fundamentals for a lot of these Bitcoin mining companies are actually quite good. So let's get into the actual chart that I submitted, which is TeraWulf, a technology and Bitcoin mining company that goes by the ticker WULF, Wolf. And it's generally it's relatively simple. My view here is that first, look at the chart. Sure, Wolf is up 80% in the last week, but compared against its peers and Bitcoin price, you should get an idea if you look at the weekly chart or a monthly chart. It's still down magnitudes from its all-time high. And of course, price analysis is highly subjective, and we need to look a little bit deeper into fundamentals, their revenues and whatnot, to see how much potential upside is there. But I think what we should zoom in on is the fact that TeraWulf are zero carbon Bitcoin miners. They use hydroelectric and nuclear power to run their ASIC miners, and currently their operations are more than 91% powered by zero carbon energy sources. Like other miners, they're increasing their hash rate capacity by buying and turning on more ASICs, and their capacity has increased by 25% month over month to 5.5 EHS as of June. Basically, that means that they are increasing their share of computing power on the Bitcoin network, and as a result, the amount of Bitcoin they mine month over month or quarter over quarter is increasing. So to wrap up, being centered and operational, having their operations based on renewable energy is a huge plus in my opinion, because the halving's coming up where Bitcoin's block reward size, it's going to get cut in half. That's going to place some pressure on miners. The ones that I've spoken to always say that only the strongest survive. They have this really Darwinian big energy kind of perspective on how do we deal with incoming volatility, whether it's expected or unexpected. And what happens with the upcoming halving is the block reward gets smaller, but the actual capital cost and operational cost and people's electricity rates are not changing. So this will exert some pressure on the most inefficient companies. And this is partially why for this week and for last week and the week before, we've seen miners sending record amounts of mined BTC to exchanges, because they're looking at Bitcoin price. They're looking at where break even is for most short-term or long-term investors. They're looking at their cost of production. They're looking at where projected Bitcoin price resistance will be, and they're doing all their little numbers to figure out how much of our treasury should we keep in Bitcoin and how much of it should we cash out. So let me just wrap up this one thing about about TeraWulf, and then I'll pass it on. I don't think that this will be an issue for TeraWulf. And while I expect hash rate to spike up and down after the halving, and some miners will turn off briefly and readjust their operations, in a perfect world, I'd expect to see TeraWulf attempt to increase how many ASICs they bring online. And as a result, of their cost of production, which is currently $9,300 per Bitcoin. That's how much it costs them to mine one Bitcoin. I'd also expect their revenues to increase. So big circle view, Bitcoin mining stocks, I believe, are a great investment right now because they trade in tandem with Bitcoin price and have outperformed it. We all have this narrative that with the halving, Bitcoin price is going to go up. Thus, Bitcoin mining stocks should go up. If you look at the charts and look back to 2 or 3 years, you see that is the case. Sure, they're overextended right now. And sure, pre-halving, post-halving, we expect volatility in Bitcoin price. That should also be reflected through Bitcoin mining stocks, making some opportunities for investment, especially without this being financial advice, in companies like TerraHash. But I think the goal for a smart investor is to look at which mining companies are using renewables or have the lowest cost of production, and their revenues kind of eclipse the debt that they have, and then look at future pullbacks in Bitcoin price and mining prices as a potential opportunity to build a position.
I want to break in here because there's a lot of information you just shared, Ray. A lot of good stuff, and I know I always like to.
It's like a Will Ferrell in Old School when he goes on that rant and passes out.
That's right.
Yeah, I did.
Okay, well, a couple thoughts there that I want to highlight for the audience here. From an investment perspective, when you have someone like Vanguard, I think, JJ, you pointed that out, that's usually a very long-term investment, which creates some type of demand that's taking basically some of that off the table. So it looks more like an investment than a trade. The framework that you're using, Ray, to look at opportunities in this space is really the cost to mine, right? And you were just noting that what is their actual energy cycle? What is it? Energy sources, because that's going to increase or decrease or retain that stability in their pricing or in their cost structure. So I think that's something else that people can be looking at. And again, I think many of these companies, you have the information available to you to look at them as you would mini equities. So that's definitely a place to start. I did want to point out something and get the team's reaction to this. So we talked about the stocks trading in tandem to the Bitcoin price. Are these being used as hedges against spot ownership of Bitcoin? So we talked about short interest for Mara and other stocks. If you own the spot Bitcoin and don't have access to other markets for actually hedging that risk, are people using this as a proxy?
It's a little bit of everything. So when you have it's not like, oh, well, here's what every single person who's shorting the stock thinks. A lot of it is just straight up, like we saw Citadel has huge ownership, and they were one of the largest short sellers because they had hedged their position, right? So obviously I'm sure they constructed the trade in such a way where they've made a ton of money now that's gone up, even though they lost on the short side of that trade. But then you also have just people who are net speculators, and this is there's a great tweet from at not Chase Coleman, who's been shorting coin. And there's just it's really like the Dunning-Kruger effect of TradFi, where they think they're so much smarter than everybody in crypto, but they have very little knowledge of how these correlations or this industry works in general. And they see it as like a proxy short of Bitcoin. Everybody wants to short MicroStrategy, right? Like MicroStrategy is going to zero 3 months ago. It's over. Michael Saylor's going to get liquidated. And when you have such overwhelming sentiment and everybody thinks they're the smartest person in the room and they get emotionally attached to these positions, there's nothing that will make somebody who's a legacy financial whatever, right? A Wall Street guy that went to Wharton, nothing makes them matter than seeing people they deem as lesser educated than themselves making a lot of money. So they get really attached to these short positions, and it's the same story as you saw with GameStop. They just get blown out. Like somebody much bigger than retail will take the other side of that trade and they'll liquidate you.
Right.
So they could be right long term, but markets are all about positioning. And I think there's an overwhelming people that are just blindly speculating on the number going down, even though, and not looking at the correlation, right? Like Bitcoin was up so much from the lows, from the November lows, and it took a very long time for these mining stocks to really recover. Like Mara still hasn't recovered. Let me see. So Mara, for example, August of last year, Bitcoin was trading under 25,000 and Mara was just under $20 a share. Now it's only at 1743, but Bitcoin's at 30,600 or so. And there's also the ordinals, so their fee revenue is increasing.
Right.
And that there's still this big delta, right? Price should be much higher than it is. Realistically, this is probably a $30 stock or so, not financial advice, but it should be higher just based on that simple correlation reading.
Right. Well, I guess that also goes into picking winners and losers from the mining sector, right? I think, Ray, you just put forth a pretty strong case for why someone could be looking and doing good research on Wolf.
Wolf. HUD-A, all of those.
But
They're also profiting from AI, right? A lot of them have shifted to longer lending.
They're using rack space to provide space for people running GPUs to train AIs. It's true.
So there might be a multi-sector type of investment. So, okay, well, we could spend, I think, a lot of time talking mining stocks. I think, Ray, you did a nice job of summarizing a framework to consider when you're looking at them. And it seems like right now, long before we go into the halvening, if you haven't seen, check out last week's episode. We talked about the lessons for how to prepare for the halvening, because it's months before we start to see the cycle top that we are expecting to happen at some point. Now is the time to be doing your research. Now is the time to be preparing for that. And you don't need to YOLO in today, tomorrow. You can start preparing rather than just diving headfirst into the shallow water. All right, well, let's move on to another topic here, because there's a lot going on in the market. So we talked about already the CPI print and the way in which the Fed is going to be looking at how do they react to that? How do they make a narrative about looking to continue to have rates higher and perhaps even raising rates higher? And that also dovetails into the conversation that we've had on this show, and we've obviously all heard in the marketplace around market liquidity. And we started to see some signs this week and over the last 2 weeks, really, about M2, global M2, which is a measure of market liquidity, looking to break down and to shrink as balance sheets for central banks across the globe are starting to shrink. We're starting to see the SPX, which is breaking above the net liquidity. So if you look at the chart, it kind of looks like jaws of life opening up, and that usually clamps shut. So I wanted to talk to you guys a little bit about the liquidity situation, get a perspective. Ben, I want to open it up with you. You wrote a piece just the last week or so about looking at the Fed, their approach to inflation, as well as trying to navigate and engineer a soft landing. How do you think about some of these signs of liquidity shrinking with respect to that piece and what the Fed is attempting or trying to do with that soft landing?
The old woolly bully. It feels good, dance with the tune, sort of. What that topic was about, that I wrote about, and it was really just looking at some of the things you mentioned. And with rates plateauing, if liquidity isn't as bad as kind of all these data points that we've been using allude to, and price starts to rip higher, we kind of just have to ride with it. Was the point of that piece. And one of the data points I was really leaning into was going through some of the recent treasury auctions and really just general market reports from CME Group talking about U.S. Treasury market. And what stands out is how strong they keep saying this market is. Like, just looking at the June recap, open interest reached 17.8 million contracts on May 23rd, the highest level in more than 45 years of trading. So if there's a liquidity issue, it hasn't really come to the treasury market. So it would be seen elsewhere, depending upon what data points all these guys are using. And one of the points the Fed, I think, is really trying to figure out here is because the euro dollar market doesn't really show itself in the M2 reading, because it's not really part of money that is backed by various insurance policies, so to speak, like FDIC. So how do you pull back the reins on that? They're trying to gain exposure, and is that what they're doing here?
Let me break in real quick. For those who are unfamiliar with that term, euro dollar market, can you just give a short description for that for the audience?
So the euro dollar market are basically accounts that are in Europe that are denominated in dollar, and then those banks are able to go ahead and function accordingly and provide kind of that deposit-like infrastructure for entities abroad. And so that those dollars aren't actually deposits in the U.S., so to speak, and they're not dollars that reside in Europe, as tends to be noted as. It's just dollar-denominated deposits.
Perfect. Yeah, and just to add to that, the reason that's a little unique is that in the United States, you have to have a charter to have a bank to be able to print dollars or to be able to loan them out in a U.S. dollar-denominated account. European banks, where that system is able to get around that, right? They actually don't have the charter to do that, but multinationals are looking for that liquidity. And because of their ability to access different sources of liquidity, these banks, they're able to offer up those accounts, which creates a sort of, some call it a shadow system, but I'm not sure it's necessarily that nefarious, but it does exist outside of the United States Central Bank and Treasury.
It's an ominous name that doesn't really speak to what it's all about.
Right.
It's definitely on the radar of trying to really get it within reins of the central bank, because I think it's been on the periphery for so long, and it's kind of exposed itself as causing some market dislocations that they want to try to manage it better.
So just to summarize here, you're saying you're not seeing yet the stress of low liquidity. It hasn't really reared its ugly head.
Where would we see it first? I think treasury markets would be one area, and I don't see anything denoting that. So corporate would be the next one, and I haven't done a deep dive into the corporate markets to see what the spreads are and to see what the demand is, but that would be the area to look to find out if there is liquidity concerns.
The one indicator that sort of made me pause was the SPX breaking above from net liquidity. And like I said, it's a sort of jaws of life view where you start to see the SPX go up and net liquidity going down. And during the previous 3 cycles, you've seen where the SPX ends up eventually tapering off and going down. So we see a downturn in the market. JJ, is that something you're looking for?
I honestly think, like, you see, it's so widely discussed that it's almost like Schrodinger's liquidity, where people talk about it and it's like, oh, liquidity is going down, it's bearish. And it causes more people to short, I think. And I think if liquidity was really going down that badly, there may be factors that we're not aware of, right? Like, I'm not an economic expert, I don't know these things, but why is DXY going down? If liquidities are leaving markets, then theoretically that should make DXY stronger, right? And we're not seeing that. So that tells me that there's more to the story. Obviously, risk is going up, DXY is going down. Until that reverts in some way, I look at that as a bear trap. And there has been instances in the past, like you said, where liquidity goes down for whatever reason, risk continues to rise. It's not something that's going to be immediate where it's like, hey, liquidity dropped, so prices have to go to zero tomorrow. Over time, it'll probably catch up. We'll see some kind of wipeout crash, but I don't think that necessarily is coming tomorrow, which should happen now tomorrow that I've said that.
We'll get some time to plan. All right, so as with many topics here, we want to continue to monitor them, see if the liquidity starts to drive more quickly. Until then, we'll just keep an eye on some of these indicators. Let's move on to another project that is much more crypto-centric. And this is the Project Mariana, which is a collaboration between the BIS Innovation Hub, which is the Bank of International Settlement, the Bank of France, Monetary Authority of Singapore, and the Swiss National Bank. And they're exploring the usage of Curve to do a automated market maker. So this would be a way for them to automate the movement of capital between those entities. And I think in some ways, really start to build out a brand new monetary system that is perhaps more capital efficient, but with a lot more controls. And really, the interesting part about this story goes back to the fact that they're looking at Curve technology. So that was the exploration for it. And this really struck a chord with me when I read the headline, because this is exactly what Ben talked about in last week's episode. Ben, you talked about what the Bretton Woods 3 thesis, which comes from Pozar, talking about how we would have a multipolar world of multi-reserve currencies, and that the advent of new technologies could bring down the dominance. And you looked at Bitcoin's dominance coming down as these technologies came forward, and what that could mean for the US dollar. So Ben, I want to come back to you. When you read this headline and hear that the BIS and these other banks are using Curve, what's your immediate reaction?
There is no better time and no better terms of interesting times to exist to watch financial innovation take place. I'm a fan to see it. I mean, they noted it's an experimentation just to understand the technology better. They're not going to be on a blockchain, so I can understand why this would be experiment, because they're probably going to have to adopt it quite a bit to what their use cases are going to be. But when we went ahead and discussed this internally and we looked at this tech, and it brought back to the surface kind of those items I was mentioning last week and the week before, that's what led me down this rabbit hole of checking out CPI, because I wanted to know, based upon what I had mentioned, where this technology is going to reduce the need to go ahead and use US dollars to conduct trade, globally speaking, because Curve would allow you to go ahead and conduct trade in a way that's less reliant upon the US dollar. Are there discussions taking place in these kind of global regulations and global banking groups around what might happen with this technology relative to the US dollar dominance, globally speaking? And going back through all their speeches and working papers and discussions, I haven't seen anything as of yet. Everything's been a discussion of the great innovation of, same moment settlements. So there's less risk that somebody on either leg of a trade might default on the payment. And so how this technology solves that, and FX swaps being essentially cheaper to conduct, and all the great benefits, and the need to have trust and security was really on the forefront of their mind, but they haven't really gone down that discussion of what might happen to kind of like that global ordering, if you will, of currencies around the world.
Yeah, it seems like they're really sticking the smallest toe into the ocean of crypto just to see how the water feels. Ray, I want to hear your thoughts. Do you see this as a bullish signal for crypto? Do you think maybe crypto is doing its invasion slowly, stealthily into the TradFi world?
That's a great question. I would love to kind of interpret the curve adoption by institutional banks as an example of real world assets coming on chain and that yielding some benefit to, let's say, DeFi or crypto investors. But I don't think that's the case. I think Ripple's a great example where in previous years, Ripple technology was like the actual blockchain technology was adopted by a variety of large banks globally. And the token is not required in any of that use of the actual blockchain. So it yielded no benefit back to token holders. And I think that will probably be the case here. So while it's exciting to see blockchain get kind of more real world adoption and institutional uptake, I don't think that any investor should assume that that's a use case that's going to yield value back to people holding tokens which might be associated with that project. Also, like blockchains can be permissioned, or they can be totally open, permissionless. So in this case, I imagine it would be permissioned. So, okay, we make the movement of money more efficient and more transparent for those that are, holding hands in that circle of partners, but then it's still generally opaque to outsiders. So that could be a really general summarization, which is wrong. It could be me making assumptions about this project in particular. So that's the general kind of feeling I have about whenever I see big banks deciding to use blockchain. I think it's great. I hope it makes things cheaper for me as someone who has to use banks occasionally. I hope it allows them to build infra. Yeah, I hope it allows them to like build infra in countries that struggle with banking infrastructure and access. But what does it mean for crypto as a whole at this moment? Perhaps not too much. Still a little bit early, right?
Yeah, you make a very interesting distinction between public and private blockchains and permission and permissionless blockchains. And I think any investor needs to be asking themselves when they see headlines like this, what will be the outcome? And if I took the tone, the temperature in the room, reading BIS collectively, it's very negative on public permissionless blockchains. In fact, I think I saw a quote today, and I won't even try and butcher it, but it was effectively that there's been no material value from public blockchains. So I'm with you. I hope that we see these institutions adopt technology that is an improvement, but I do remain skeptical that those of us who invest in the public blockchain, permissionless blockchain markets would see a benefit from those investments. But time will tell. So something, again, to monitor. All right, guys.
But can I just say, I think that's totally separate, my view and even your statements. I think that's totally separate from Ben's thesis of the blockchain economy and its growth and its ability to then kind of conduct a vampire attack on the dollar or people or countries, sovereigns, institutions that then decide to use blockchain to settle and to move money around, then as a result of that also choosing to not use the dollar for all of those transactions, or the new economy that is built on blockchains in the future not being dollar denominated. I think our views are totally different from Ben's. Ben's looking at like the entire universe of what could happen in 15 years. So there's a lot of value in his perspective there.
Well, I'm very curious to see how that multipolar world begins to manifest itself, what we actually see as the trading patterns and the currency patterns as they start to be adopted, as Ben, you pointed out in your pieces, which may or may not be reliant on these new technologies. So more to come there. But guys, I really want to get to the cage match. I'm really excited to hear some thoughts on the upcoming battle between two tech titans. We got Elon Musk versus Mark Zuckerberg, that they're going to be doing, as far as I can tell, an all-charity event where they are going to be getting into the octagon to beat each other senseless, I think to get rid of some old blood. Although I think the latest talk I saw from Elon was that he was suggesting that they could maybe just measure their privates to see who would actually win. I'm not sure. Maybe he's a little scared to get into the ring because there's videos going around of Zuckerberg being quite proficient in jiu-jitsu. So, guys, I want to hear your thoughts. Which team are you on? I will point out, I asked ChatGPT to run an analysis, and it gave Elon a 60% chance of winning the bout. But I know that we've got someone in this audience who actually has some inside knowledge. So, JJ, I want to hear from you, since you used to beat up people as a profession in the ring. What are your thoughts on this match and the people that are backing both parties, Elon or Zuck?
Yeah, I was telling the guys here, in another life, I actually trained under John Danaher's lineage, who appears, at least Elon's done one session with him. There was a picture posted of Elon, Lex Friedman, who obviously everyone knows, George St. Pierre, former 170-pound UFC champion, and Elon. And it seems like they've done some sort of private. From what I know about Danaher, so he was my coach's coach, and he's a very eccentric person. Like I was telling the guys, he's a philosophy major from Columbia. He basically abandoned normal life to pursue jiu-jitsu as a sole focus. Lived in a gym for quite a while, and in order just to get privates with the guy, it was in the hotbed of New York City, so he had tons of people that were constantly requesting privates with him. Everybody from celebrities and Wall Street people that could write him blank checks to high-level fighters, and he was very selective about who he worked with. He doesn't care much for publicity or fame or any of those things. So the fact that he took private with Elon tells me that there's something there that attracts him to Elon beyond just kind of his fame. So, and I think John has a standard that he doesn't compromise on. So I think if Elon is continuing to post pictures with Danaher, I would grant Elon almost 100% chance of winning this fight. I think he's just a master strategist, but that's a very big if. I think he's posted one picture so far, and I don't know if Elon has the time to dedicate to this as Danaher would request, and I don't see Danaher lowering his standard for anybody.
Okay.
So,
well, I want to know, if you have Elon, he walks in the gym, he's never done any BJJ, and you meet up with this trainer, how much time does Elon need to become moderately proficient?
that's a good question. I guess, so I believe Zuckerberg is a blue belt. Blue belt is roughly training 3 days a week for a year to 2 years. I think if you spent 2 hours a day with John, say 3 times a week for 6 months, you could be up to that level of proficiency. But Elon also has a significant size advantage, and Danaher is a master strategist. So I think if you gave Elon 3 to 4 months of solid training with Danaher, at least 3 times a week, I think Elon would just be able to, just size alone, and John's knowledge of grappling and fighting sports in general, I think Elon would just probably take him down, and if not submit him, just dominate the fight, GSP style.
Unfortunately, I've seen the pictures of Elon on vacation, and I agree, he definitely has a size advantage. Ben, what are your thoughts here? Are you going with the 100% take if this trend continues for Elon, or maybe you're taking Zuck?
Well, I'll first say that I'm kind of curious if there's another picture posted. Does your AI skew the results and sort of pick up on that? But to get to who I would take, originally I was reminded, I forgot when this was posted. I think it was a few years ago. It might have been even before that. But Jack Dorsey went ahead and told a story of when he went over to Zuckerberg's house and had goat that Zuckerberg killed. And so he went into this discussion that Zuckerberg went ahead and killed everything he ate. So with that mindset, like, Zuckerberg has spent time, just killing things for eating them. I think we shouldn't take that lightly. But then if you go ahead and dive into that story a little bit, so he actually turned vegetarian, I think, as a result of that time. So understanding that, I'm actually thinking Elon might come out here, because I don't think Zuckerberg has enough of that fiery soul to go ahead and take Elon down. And
I think
not do
Zuck is scrappy. Like, I think if they fought today, I actually think Zuckerberg would beat him, but it's like 40 to 50 pounds that Elon has on him. And that's a big body to have laying on you, especially if Danaher's the one instructing it. So
yeah, right.
But I'd say Zuck, the way Zuck kind of ducks and dodges those questions on Capitol Hill, and he's so slimy at getting out of those precarious kind of grapple hold situations with all his lawyers, Musk might not be able to get a hold of him.
Oh,
he's just so skittish.
I think Zuckerberg is more. I don't think it's actually going to happen. I don't think it's going to manifest ultimately. I think it's just Elon is a very good grifter, and I think he likes talking a big game, but I don't see it actually. It's good publicity right now.
It'd be great.
Actually goes through.
Yeah, if they did it at a Roman Coliseum, that would be awesome.
Yeah, it would be incredible. But I honestly don't think it's going to happen.
We should keep in mind, Elon is like just an expert at teaching himself things.
Yeah.
So if he just really wanted to dedicate the time to go ahead and become an expert, at this, like he would do it.
That's
Granted,
Probably
Twitter's
installed a
more-
Neuralink and like Morpheus,
Matrix.
the chosen one in the Matrix. He's already uploaded all martial arts into his mind. So I would go with Zuck because I do think that Musk could benefit from a dent to his hubris. Just experiencing failure once in his life might be good. But given Zuck's kind of like Facebook data monetization, the whole Facebook being used to commit genocides multiple times in the last decade, all that sort of stuff, it would also be good to see Zuck take a few blows. I think Musk is a formidable competitor in terms of his size and his willpower. That man does anything. Nothing is impossible to him. He's a visionary. So just on those grounds alone, I have a lower estimate for Zuckerberg having success in a cage match.
So I'm gonna summarize what we've got here. We've got JJ. You think Elon's got in the bag, but he continues to train. I think Ben, you went back and forth. You finally landed on Elon.
Yep.
All right. And then Ray, I think you're thinking more of who you'd like to see versus who you think may take it. I think you gave Zuck a couple of points for being able to get out of any grapple hold like he does when he's on Capitol Hill and they ask him straightforward questions and he somehow dodges. Is that right? Okay. For my part, I'm gonna stick with the AI. We had a question or a comment that came through on YouTube. They thought this whole channel was AI. So I'm gonna lean into that and just say I'm gonna stick with AI, which gives Elon today a 60% advantage. I'm going to continue to monitor it. We're going to see where this goes as we get closer to the day. And I do hope this cage match happens for nothing else. I think it'd be great for charity. And with that, I'm going to wrap up this week's show. JJ, Ray, Ben, Lily, appreciate you guys coming by and dropping some alpha. For those of you out there listening every week, we thank you. We enjoy your presence. We love having you here. Be sure to like and subscribe if you got anything value out of this conversation. Let us know in the comments what you'd like for us to be covering that we're not, or maybe where we talked about something but wanted to go a little bit deeper and you'd like a little bit more. And the last point I'll share is that we continue to make good progress on the video portion. I know the audience has asked several times, where can we get access to the charts and the graphs? We'd like to see more of the characters. Well, we've had that going. And just this last week, we were focused on doing some test runs. We're going to continue to do that. And I think all of us are super excited about what's going to be coming out in the next couple of weeks. So stay tuned. For all of you who are just waiting, you just have to wait a little bit longer, but I promise it's going to be worth the wait. We've got a lot coming on. So until next week, have a great week. Stay safe out there. This is Marconi White signing off.